Hi, Eric here from 5minuteinvesting.com. And today I want to talk about other people's research and what you should do with them. So, I know a lot of investors follow analysts and other people's research to see if what they're doing is good or bad and so on. Now, I just want to let you know that there's one thing you need to be careful of when you're following other people's research. Now, oftentimes, when you're following an analyst or a person, they might not do a comprehensive, a big picture research. Now, they might specialize in technical analysis or they might specialize in fundamental analysis. Now, in my experience, I think it works the best when you put all of these together and understand the company as one big picture. So, they might focus on fundamental, technical. They might just look at news, their strategy, and so on and so forth. But when you're deciding whether you should invest in a company or not, you should look at all these together as one. And that is very important. Second, when you decide to invest, it is very important that you know why you're investing. Like, what is the main driver of your investment decision? Like, why do you think it is going to go up after you buy? And that is super important because that gives you confidence. Confidence. And more importantly, conviction. Let's say you bought a stock at $10. Okay. And at this point, you think it's going to go to 15. Okay? That's a 50% gain, which is fantastic. But do you know why? Maybe they're going to have a new product launch. So, new product launch. Now, at this point, you might think to yourself, okay, I'm going to wait for the product launch. What happens if it goes down to $9 before the launch? What happens if the stock goes down to $9 before the launch? Are you going to hold or are you going to sell? Now, if you don't know that they're going to launch a product and you know why they went down to $9 just because the market is fluctuating, then you can hold. But the lower it goes, the more this stock will impact you emotionally. So then when you're thinking about buying a stock and you only rely on other people's research, you might exit at $9 or $8 because you're not sure or you're not convinced that's the reason why the company will go up. But if you are convinced that even if it goes down to $8 or $9 or just hovering there and you're just waiting for the product launch, you will continue to hold this investment assuming this is a good opportunity. Because chances are, if you buy it today, the stock wouldn't go up tomorrow. It's not going to go up right away because the reason you're buying is probably some time down the line, maybe 3 months from now, maybe 6 months from now, that the new product is going to get launched, the company is going to do better. It's not going to happen immediately. That's why you get it at a better price because you're willing to think ahead. So when you're relying on other people's research, you got to keep in mind that you're emotionally believing in this reason and that you're willing to stick out and holding the stock until this realizes. And it is equally important when it goes down and suddenly, let's say you found out that the new product is going to be a failure. The new product is going to be a failure. So even at $10, you will leave because the reason that keeps you in this stock doesn't exist anymore. Even though they might have a new project you don't know about, or they might have a sudden boost in earning, or they might manipulate their accounting policy. There might be other reasons to hit 15, but if the reason you entered, which is the new product launch, it's going to be a failure, you'll exit even at $10. Why? Because you wouldn't know what to expect next. The stock or the company is not going to play out based on your expectation. Because how do you know, let's say this takes 6 months, okay? And then you know the product is going to be a failure, and suddenly they announce something bad that you didn't expect. You're going to be thrown off guard. So if the reason you invest no longer exists, then I would usually recommend you to exit, unless you have a very strong reason, another reason that this stock will go up to $15. And this is why you shouldn't rely 100% on other people's research, because you need to be convinced of this reason. And that's what allows you to hold the stock from 10 to 15, maybe even to 30. So give me a subscribe or a like if you like this video, and leave a comment below if you have any burning questions about investing. Good luck!